Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 4th, 2016. First of all, next Tuesday, November 8th, is United States elections. If you're a United States citizen, please don't forget to exercise your right and vote. In California here, if you're an absentee voter, you can actually drop off your ballot if you haven't sent it in yet. So please don't forget to vote. As far as the stock market, it prefers Clinton win over Trump because Trump is unpredictable while Clinton is very much predictable. As a result of the investigation that FBI reopened conveniently right before the elections, stocks have been sliding for 8 sessions straight. So clearly, again, stock market prefers Clinton to win. We'll look at S&P 500. The oversold conditions are already present. High yield bonds may be bottoming, so that's one of the good signs for the stock market. We'll look at the investment grade bonds also. We'll look at a Forex universe, and then as its effects on gold and GDX and divergences in GDX. Oil reaffirmed its resistance and dropped for a second week straight, and we'll look at natural gas, which may be headed for a breakout retest. And then we'll finish off with copper, which may have finally stopped falling. All right, let's start with S&P 500 ETF SPY in a daily time frame. So basically we had a non-stop selling for the past couple of weeks with a break below recent October and September lows. Whether or not we will be heading lower to Brexit lows remains an open question. With the uncertainty about the election, and it's a very razor close elections again, and I'm reading that it's coming down to Florida again, so it's very much reminiscent of Gore-Bush elections. If we do come down, we may see some strong volatility unless Clinton gets a clear win. As far as market breadth and various indicators, so here is on balance volume, and you can see that on balance volume has already broken below this similar level that it set in June. So even though the market is still way up here and it was down here in June, you can see that there is a bearish divergence now. So again, whether or not it will play out, I have no idea, and divergences are notorious for not playing out. This divergence here did play out. I pointed this one out a few weeks ago, whereas the market was basically flat to slightly up. We had a lower lows and unbalance on advanced decline line and advanced decline volume line. So that did play out. Some of the indicators, though, are already oversold. So here's intermediate term breadth momentum oscillator, which is basically an advanced decline line oscillator. And you can see it's in a negative territory. I've been pointing this out for a little while now, that there needs to be a reset, so to speak. So we're now there, and we're sort of negative already. So maybe the support will be found. An obvious support would be, around here, around the 200-day moving average. But again, Tuesday election, so we can see huge spikes up and down. We could see very, something similar to this, where in the Brexit happened, we see an enormous gap down, and then just as big and quick of a reversal. So very difficult to predict what's going to happen on Tuesday, or rather Wednesday, when the results will trickle in. Here is S&P 500 and also daily time frame. Here I just wanted to point out one of my indicators, MBA Market Breadth Index. It is still very much in a bullish territory, still at 5, so there's quite a bit of strength still in the market. One of the inputs that I call ROA MBI, percentage of stocks in an uptrend basically, has been under pressure, and we have kind of at 47%. So but in my opinion, this is already quite oversold, so I would not be surprised if we find support and rally from here. Also, down below here, here's RSI on a daily time frame. It is somewhat it's somewhat oversold, but also there is a little bit of a bearish divergence. You can see from this level, you can see that RSI made a higher low than here. So maybe we are going to still see that Brexit lows after all. As far as the percentage of stocks above the 50-day EMA, we are clearly in oversold territory, around 30%. Here's Brexit low, and then we bottomed out and popped higher. As far as the longer term time frame, we're still very much in a bullish territory, albeit I think we are coming down a little bit. So for example, bullish percent index and percentage of stocks above the 200-day exponential moving average are now at 50%. So that is certainly under pressure. But longer term, I think, again, still a bullish chart. Here's a weekly time frame, and this is one of those clear support breaks. Whether or not we get follow through is an entirely different story. Like, for example, here, I don't know where, let's say here we had a breakdown and then a follow through lower, but we could just turn right around, like for example, breakdown, turn around, breakdown, turn around. So eventually we did broke down here, but we'll see what happens, during the elections. I think this is a very big market moving event that pretty much everybody is waiting for. Junk bonds, these are all-time highs, and we kind of came down and we're trying to bottom here. So maybe we're going to bottom around here, 35.50, 35.70. So if junk bonds do hold, that would bode well for the general market, because again, I showed the junk bonds correlate highly to the general market. So if junk bonds rally, it only makes sense for the stocks to follow suit. And here is the junk bonds in the weekly time frame, also all-time highs, and this is the second week in a row that we had a selling, basically. But the volume is quite high here, so maybe this is already as low as it's gonna go. Of course, all of this uncertainty with the upcoming elections, the bonds were behaving, more or less predictably, as they are gaining in price during the times of heightened uncertainty. So here's a weekly time frame. Bonds actually gained for the week 1.1%, which makes sense because stocks dropped strongly. So bonds are gaining during the times of uncertainty, especially the TLT, the treasuries. But the Federal Reserve, I think, has hinted pretty strongly that they will go ahead and raise interest rates in upcoming meeting in December. So maybe their bonds are already pricing in that, and if their interest rates will go up, I think bonds will continue to be pushed lower. For now, I think the support break that we had here in October, beginning of October, is still holding, and we were not yet able to recapture this the support break. And this is for TLT, and this is quite a volatile security. On a less volatile security, the AG, the aggregate bond fund, which includes a lot of corporate bonds, so somewhat similar picture, but a lot stronger, I think, than TLT. Also sold off some, but I think the support so far has held in this area here. Also, this could be, let's say Clinton does win on Tuesday and Wednesday, the results will be announced. I think TLT may sell off really hard because stocks will, by extension, rally on Clinton's win. Here's HEG. You could say that this is still a sort of a flag or a pennant. It just depends on where you draw your lines. I used to draw it through this lows here, so if that's a fact, then we broke it. But then if we draw it through this lows here, then we're still kind of consolidating sideways. So for now, bonds are still, well, I would say neutral to possibly somewhat bullish. All right, moving on to the Forex universe. So this is US dollar in the daily time frame, and we already saw some signs a couple of weeks ago with this kind of resistance with a steep selling tail here, and then a couple of days of consolidation and a plunge lower. So this entire week we basically had relatively strong selling. Now you can see this is a really messy chart, and it's kind of hard to draw patterns here, but here I thought this handle and this stick was a bull flag, so we had a bull flag breakout, and then it was just completely negated and then kind of came down, and now it's formed into some sort of maybe a cup, and maybe this is a handle, and maybe we'll continue higher. But in any case, kind of messy chart, you can see. On the weekly time frame, it's a little more clear. We had a clear breakout here in 2014, continuation to 52-week highs, and now we're basically consolidating in a sideways manner. Here's this week's drop. 1.28% this week we dropped, but I think the uptrend still remains, and we could see, dollar kind of meander here and then eventually push higher. I think a breakout above 100 would weigh seriously on gold, which we'll get to very soon. Here's euro versus the US dollar. Last week I mentioned that we did break this low from 1.12 here, and then another low, so two levels were broken. This one I was less sure about, this level here, and we kind of came down, but looks like we rallied back above. Now we're retesting this breakdown, basically, for euro. This is a weekly chart of euro, going back 3 years, almost like a mirror image of US dollar index. So bearish chart, in my opinion. We had couple of spikes here, retesting the bearish theory here, and for now the support was found more or less where I pointed out a couple of weeks ago, but I still think this is a bearish chart. So after this latest bounce will exhaust itself, I don't know where it will exhaust itself. I think we'll see a rollover and the euro will follow lower, unless of course something completely unpredictable happens and we break out above 1.1711. This is a British pound versus the US dollar. I mentioned that we were very oversold a couple of weeks ago, and we're now kind of rallying to basically these levels here, breakdown levels. I think we may get here, or maybe we may actually get even higher to possibly 1.353. We had two inside weeks in a row here, and looks like this week we are breaking out of this consolidation, and this is bullish in the short term again. So I think a rally to at least 1.28 to possibly 1.34 is very much possible. And finally, the US dollar versus Japanese yen. I think in this case, the dollar has bottomed out versus Japanese yen and started to gain. So, but then again, we have another big red candle, so we may actually kind of come down again and retest this level. Overall, I think again the US dollar is still in a bullish, this is still a long-term bullish chart, but maybe short-term we see some more volatility and potential retest, maybe even come down a little lower for the US dollar in the short term. All right, here's gold. This is a continuous contract on a daily time frame. So we had a support break here in October, came down all the way to this low here, more or less held support at the 200-day moving average and 1200 here, and then rallied. So where did we rally to? We rallied exactly to the support break. So where does this leave us? We're basically retesting support. You can see here on the weekly time frame. So we broke down, we came, now we're exactly we're retesting the support break. This candlestick is very large, and also it is following, already fourth black candlestick. So especially if the dollar strengthens next week, for some reason, we could see gold roll over strongly. Here is GLD, and it's a little bit more obvious here because we had a big gap here in the support break. So now we filled that gap on GLD. This divergence still remains. This is a bearish divergence. You can see on balance volume pushed lower here. But we made a higher high in the actual index itself. Lots of divergences here on GDX. This is gold miners ETF. So the latest one is here on the, from October to just November high here. You can see that we made a higher high. Yet all three indicators, the advanced decline percent, advanced decline volume percent, and unbalanced volume, made lower highs. So this means that this rally was not broad, and we could see a rollover, especially if we break 2250 or 22. That could be it for gold miners and for gold as well. And again, I pointed out this indicator, this gold miners bullish percent index, which dropped precipitously into the possibly completely bearish territory as early as October. So we may already be in a bear market for gold. Of course, unless we rally strongly from here, and especially for gold, we need to basically negate the support break. This is West Texas Intermediate, light crude oil. I think this chart pretty much speaks for itself. Pointed out this resistance a few weeks ago from this high here. Even though we exceeded and even closed above this resistance, I was not really I didn't think this was a true breakout. We basically rolled over with a vengeance. And this whole talk about production cuts, etc., it's just, I don't know, I wouldn't really pay too much attention to it because, as I said before, United States producers themselves can just outproduce anybody in the world. And right now they're holding back the capacity. The weekly time frame, still very much a bearish chart. I keep pointing this out. For now, we have reaffirmed resistance here in the $52 area. So we now have another, point to add to our several touches already of this area, and we could just completely unravel and basically retest 2016 lows. Yeah, I mean, anything is possible, and I know something could happen, and for some reason the prices would go up. But again, like I said, I think the capacity is there, and we can just, United States producer, just produce a whole boatload of oil, basically. Here's natural gas on a daily time frame. This was a bit unexpected. So I drew in this trend line, kind of blew right through it, attempted to rally, and then kind of sold off again this week. So the basic line in the sand here is this major resistance area around $2.50 that was broken to the upside, and we reached 52-week highs. So if we turn around and break below it now, and especially if we break below it, attempt to rally and get resistance there again, then I mean, then we'll have something to worry about. As of right now, I still think natural gas is in a bull market. Here's the $2.50 area that I think we had a breakout above. So if we get back below it and push lower, then we may be back in a bear market. But for now, I think we're in a bull market, and I think we're um, you know probably we're going to be making an attempt to push higher from here. And here's that same line in the sand on UNG, which is basically around $7 and change. And finally, we'll finish off with copper this week. So copper on a weekly time frame. This is still a bearish chart. So far, it still looks somewhat bearish to me. So for now, we still have like a sideways consolidation, basically this entire year. And for me to become interested in the long side, I think we need to see a breakout above $2.30, maybe above the pivot point here at $2.36. Breakout, throwback, rally. So maybe something along those lines. But for now, I still see a downtrend in security, maybe with a sideways consolidation. But maybe we'll just get bounced off of this line again and kind of like oil and roll back down. So for now, I wouldn't get terribly excited about copper. Yeah, it's big volume here, but I don't know. Maybe it's big volume because people are taking short positions. Anyways, that's it for this week's recap. If you have any questions, please don't hesitate to send them in or comment on the YouTube video and on my blog. Please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trade alert services. Bye-bye.